Yes, we were on mute. I apologize for that, guys. Welcome to this intraday strategy webinar on SB. Mike Boutros here with you. I was going for a minute there with the mic off, but I am here. We just got the release of the GDP figures from Canada, coming in stronger than expected at 0.5% for the month of June, month over month. We're looking for a print of 0.2, year on year, even stronger at 0.6. You saw a pretty strong reaction here in the dollar CAD moving to the downside, essentially checking the Tokyo lows from last night. That comes in at 131.20 or so. We'll take a look at that setup in a moment, but I just wanted to welcome everyone to September trade. We've obviously been waiting for this month for some time. Heading into last month, volatility just went explosive, and this is what we've been waiting for. This month holds extreme significance. Here we are on the precipice, just coming into the ECB and non-farm payrolls, obviously, but more importantly, the Fed and the interest rate decision on the 17th, and we'll be looking to see if they actually do signal liftoff or if they're going to still continue to take this wait-and-see approach. With that said, there's been, obviously, like I said, a huge influx in volatility, and a lot of these setups are primed for the pump. Yesterday, I was very light on my feet, guys. I really didn't take any positions at all, to be quite honest with you. There were some great opportunities. I know I was talking with, Mark on Twitter last night. There were some great opportunities, but heading into the end of the month, heading into the start of the month, from our standpoint on the intraday, we really got to stay nimble, okay? We don't want to really get married to any one bias or any one direction until we get some of these ranges to start setting our open. In any event, let's take a look real quick, since the dollar CAD is on the move, of where that trade is on the broader scheme of things. Here's what the dollar CAD looks like on the daily chart. And, we tried to play the downside on this for a while until we broke through that 31.76, which was, of course, the high day close that we set back on the 5th. Ever since that day where we pushed through it, I haven't really touched this thing. Here you are with an outside candle. It's not a reversal candle. But took all of Friday's range out and closed well below near-term support as we continue to see that divergence hold and steady. So higher high in price, lower high in momentum. You'd start to look for a basic correction. Now we have some conviction on the trigger break into divergence, or the divergence rather into trigger break, to use this high for our new reference point on this fib. Gives you an initial target just at 130.60. So not really in the trade yet, but certainly this data continuing to suggest that this thing's a little bit stretched and that you're likely to get a snapback on this if the dollar continues to correct. And this is what we were looking at, with the dollar. So once we broke through 12.12, that's what we were talking about last week. Again, the short side bias sort of got taken out on this from the immediate standpoint. Obviously, we need to clear at last month's high, which is still all the way up at 12.71. But while above this region here, we want to be mindful of, dollar shorts. This is what we would need to close below to really get back on the short side for the dollar. Mark Haverman saying, I touched it, dollar CAD short at 132.22. Nice. Nice. Yeah, so you'll be looking for that near-term support right at the lows for the week, the opening range low, Mark. Excuse me. And then once that gives out, look for that confluence range there. And if this is, compromised, then this is a sliding parallel for the structure off the lows there that we were following for some time. So I think that would give us a nice indication near term. Again, we'll drop our monthly markers here once today's trade is out. From the intraday standpoint, here's what dollar index looks like, by the way. All right. So if anything, on its face value, it's just putting in a simple weekly opening range at this point. So there's your weekly open. You set a low, kind of probe through it in overnight trade. But here we are testing the highs, which is again lined up pretty nicely with last week's high. Now we can say last month's high. And certainly we've got a very clear definitive range between 11,984, let's say, and 11,000 and 12,004. Really the range to beat here for the dollar index. Let's clean this up a little bit. This is what I was looking at overnight trade, right before we left, and it looks like at this point you've even made a break to the top side. So we'll have to see how the U.S. Open looks. But I'll be treating the dollar index broadly as an opening range for the week here. Mark Haverman saying, what about long-term hold? Long-term hold on what, Mark, for the dollar CAD? Yeah, you could probably squeeze a good amount off that trade. Again, I'm not really a long-term kind of guy, so I really wouldn't be willing to sit in that with major upswings on such a strong uptrend. Listen, it could be the high. You're asking me to call the high on this market. I don't know if we have enough technical evidence to suggest that it's there. Certainly the washout that we got last week, it wasn't in the dollar CAD, but on some of those pairs, euro dollar, on some of those majors do look like it's certainly stretched, and we could have put in a near-term low. With dollar CAD, we've been getting that ongoing divergence to the highs. We've been getting all these false breaks to the downside, so it might be worth a shot. You have a really great entry. I mean, you know what I mean, Mark? But you'd need to at least start to clear the previous month's low. And one thing I do as a basic form of analysis, guys, when I'm looking to play these turns a lot, when's the last time we saw the previous month's low compromised? And in fact, if you look at this pair, the last time we saw that was actually April on the breakdown, and that was the last recovery. Every single test, every single month since then, we haven't even seen the previous monthly low, right? So before I start getting all excited about this, on a trade like that, Mark, I'd start to trim a little bit off as you get into support. If that breaks, keep your stops at break even, then look for a larger target to the downside for sure. But until we start to at least clear a previous monthly or weekly low, this thing is, is likely to be a chop fest still. Yes, you're right. He says, well, now GDP is good and oil is up. Yes, the oil trade has been in the news as of late, and certainly one of my colleagues has been watching that very closely. And he essentially, was pretty close to calling it there on the oil trade. Let me just take a look at that. Oops, chart real quick. Right? So you've seen a pretty wicked snapback, and it all started with a break of this confluence support region, which is basically a longer dated 786 retracement. This dates all the way back to the lows from 2000. These are the 99 lows, okay, or 1998 lows. And that 786 came right across a basic trend line or channel resistance off the highs. And someone's messing with my trend lines here. And that confluence region broke. This thing popped right through. You had a momentum resistance trigger that's been in here for a couple of months as well. These trades are unlikely just to correct softly, guys. When something is just one-way direction like this, the snapback can be pretty wicked. You saw the same thing in SPX, right? Although that coiled up for months and months before this move. Same thing in the DAX. Again, this coiled up months and months and months before this move. The same type of breakouts that you expect to see on these coils happens when the market just takes a one-way route and there's not enough back and forth, right? You get a washout, all the shorts start to clear out that long exposure or that buying in general to close that positioning. Takes this thing right back into median line resistance. So pretty nice clean move. And in fact, the lows that we hit pretty darn close to that lower median line parallel. And this gray line that you see right here is the 2015 low day close. So this is going to be let me get rid of that stretch low. This is going to now be the sort of key support structure here moving for crude moving forward. That being said, you're in resistance right now. So watch that topside break. But yes, Mark, to answer your question, if that is going to be a little bit more of a concerted low, you could see dollar CAD give us a lot more room to the downside. Although I don't like to play that corollary play, but as it looks right now, just look to see if we can get into that August low. If we can get there, I'd be much more enthused about it. Let's say that. He says, if the oil bounce is short-lived, says Kyle, I don't want to be short dollar CAD. I agree, Kyle, but here's the thing. On a magnitude bounce like this, I wouldn't say it's short-lived. Whether or not it's going to be short-lived, I think is kind of already locked in. You know what I mean, Kyle? Even if this thing pulls back towards 45, 43.50. In fact, at this point, on the stretch here, since this is a median line structure that we're looking at. Look where the 50 comes in. It's right at that same 236. So objectively, your weekly opening range low, which is yesterday's low, is right at the 50% retracement of the advance off the lows, which is the same as the 236 from the decline. So you're basically looking at like 43.58, 43.52 as a possible pullback for crude. And even if you pull back to that, I wouldn't even say it's short-lived. You know, it's a break below 42 that would put me back sort of on the, well, that was just a washout. We're heading lower. That being said, I hear you with regards to dollar CAD, but price action over the last 3 days has been pretty definitive, I think, on oil. So near-term reversal, watch for support at 43.50. Mark says high five. Same to you, my man. Permendra, thanks for asking. Still struggling with the voice, but we'll see if we can make it through this webinar without coughing. Would be a plus. Eileen, great to see you as well. All right, so I gave you some tweets out yesterday, guys. I really didn't want to throw any new or crazy setups out just because I'm very cautious, like I said, early in the month. It might be something just personality-wise with me, but you know, I really like to see price action start to develop before I start to really jump in and operate on some of these positions. So we'll go through the majors. They've been looking beautiful. It's just these volatility moves right in the start of the month into a major event risk as volume and broader market participation is likely to ease into the end of the week. Don't forget it's Labor Day. It's the last summer fling here in the U.S. A quick disclaimer, actually, I will be off on Monday. Heading into Tuesday, we'll come back with all the new setups and hopefully a lot more price action on the back of that NFP report, which is this Friday. But you know, this is the time period where in the past, personally, I've really gotten chopped up. So especially on the near-term stuff. So I tend to be a little bit more reserved. You know, as a trader, when I was just getting started, I had a bulletin board that I kept right next to the screen. And every time I would do something stupid or I would sort of like learn a lesson from a trade, I would tack it on that board. And one of the first glances when you look at it, the tack that came up like 5 times is don't trade the opens, don't trade the opens, don't trade the opens, or wait for the opening range. That came up a couple of dozen times as well. So it's just something that's sort of been implanted in my head. Anyway, long story short, euro dollar coming into an interesting area of support. I actually got a call from Jamie yesterday. We were talking about this for a while on the euro. Look, we both like the upside. The question is, do we make one more low into that 111.15, 111 region? You got the 100-day moving average at 110.98. You got the lower median line parallel for the ascent off the lows that you made in March. You got the 618 of the advance from the lows right into the high day close, which came in at 116.14. There's a lot here, right? Certainly, this offered some structural support yesterday, and from a scalp standpoint, Monday's setup did highlight the euro dollar. And that was sort of the whole play, is that, listen, if this structural support is going to offer some support, we're looking higher. The 200-day moving average as of Monday was 1302. As of last night, I tweeted out, it got dropped down to 12 and change, the 1297, and we actually ran right into that, okay? So while I've been liking the scalp to the upside, it's sort of concerning from a swing side of things that you could get a little bit more of a dip to open up the month, 111, 110.98, and that would be a great opportunity. Listen, at the end of the day, for me, if this gives out, guys, sayonara. You know, the whole long idea for euro would probably be invalidated with a move below that 100-day moving average. I mean, you know, you'd risk at that point and move back into like 108.50. So near term, I love looking for support here to start off the month. Also, keep in mind, these slope lines that we're following are multi-year slope lines. I mean, these are not, this is off the 2014 high specifically for May. This is just off the October highs, touched twice. We're right in between them, okay? And look where that lower slope line comes in, the same region we're looking at. Look where the upper slope line comes in, same region that we're looking at. So the battle lines, I hate to keep using that cliche, are drawn here as well. And, you know, from a medium-term bias, I'm still looking higher above 111.15, 110.98. Here's what the scalp looks like. And certainly from the scalp side of things, you've had plenty of opportunities to get back on the long side here for euro. Uh, excuse me, guys. Okay, so here's what the tweet looked like last night as far as the targets were concerned. And the focus range was the break that we made above 112.43. Which of course was the 100% extension off the low and a really nice pivot in price. You can see that the US session actually traded right into that before we inevitably broke heading into Asia. Um, bullish invalidation, right? And this was the upside stretch into 1297, which was the 200-day moving average. And we'll keep adjusting that daily, guys, as that 200-day moving average continues to work. So long story short, while above this median line, even on the near term, specifically above this one, you're still technically looking for long exposure. Okay, you might get a compelling short trigger that washes everyone out, and that would be the look. We'd look to see if we get that drop into 111.07, specifically 110.98. But that being said, the momentum signature since the start of the week: 60 hold, you held resistance; 40 hold, you held support. Here's the 60 break with a break above the weekly opening range, the initial weekly opening range, let's call it. So, there's nothing here compelling to start shorting this just yet. You did get a short trigger, obviously, with the break below 70 and a nice move into support, but you're now right back at support. Okay? So the way I would play this, guys, the way I'm going to play this moving forward is this. I'm going to move up the bullish invalidation, the immediate bullish invalidation to the low that we just made, basically this structure right here, really near term. Okay? And we'd need to see a break below that median line for a short bias to take us right into 111 again, 110.98. And from 110.98, as we noted on the daily chart, this would be a sweet spot. We'd start to look again for possible long exposure on the euro. Does that make sense, guys? I don't have any questions on the set. That's sort of my idea of how I'm looking to play this this week. This thing has been a killer. Last week was a great, great setup. I mean, you don't get much cleaner like that on a euro dollar scalp during major, major volatility. So the euro scalp has served us extremely well. The only adjustment to last week's levels was just the 200-day moving average in green here. We'll continue to adjust that as that moves. Look for some near-term support here. If we break below the median line, look for that drop into key support. I wouldn't be surprised to see that break. I mean, this could end up being the initial weekly opening range high. Remember, we went for a tag of that 200-day moving average, and the pullback was pretty severe. The only thing that would give us breakout type of play would be a breach above 113.66, specifically the median line off the low, somewhere in this region, 113.66, 113.80. A breakout here would put us back in the resumption to the uptrend. Mark says, really like that strategy. Yeah, we'll see if it plays out, Mark, right? Try to be as objective as we can. But this has been one of our favorite setups from the scalp side of things for the last 2 weeks. Just really, really clean. The point or the question here is just is the opening range for the month going to take us into the correction higher than the blowout, or do we just turn higher from here? And that's why, for me, just want to stand back, see what the opening range for the week looks like. Give September trade a couple of hours, a couple of days, give us a little bit more clarity. But generally speaking, you're looking for long scalps immediately while in this formation, broadly speaking, while in this formation. All right, and all these levels, guys, are highlighted for you on that Sunday scalp report hasn't changed. So those levels are the same. Just watch that green is going to be the 200-day moving average. We'll keep adjusting that. Problem is that the 111s are so far away, LOL, too big of a stop necessary. Yeah, definitely wouldn't want to take a jump into a long from here against 111, Mark. Don't misunderstand me. Not my style. But I'm just saying we have the invalidation levels pretty well defined. So if it does break, there's actually some opportunity to get on the short side here, looking for that 111. So that's the focus on Aussie or Euro dollar. And again, will be the main focus for me moving forward. The other pairs that we were watching was Euro Yen. That had a nice move as well. Here's what Euro Yen looks like. Finally, seeing a little bit of a consolidation break here. I tweeted this chart as it looked like it was breaking the upside there. Quickly reversed at the New York highs, and this was the break that would have set you off to on the short side of the trade. Key support 135.30, 135.32, 135.47. And right after we broke through that, initial targets at 134.98, we came back, tested it as resistance, still looking lower, targeting 34.52, which is the 786 retracement for the Euro Yen. These are the same levels that were highlighted on the previous scalp report from last week as we were trading into this key support structure. Remember, this is that trade that we went over where all of those slopes continue to define every single correction with precision. Okay, these are all the same slope, all parallels. Okay, we went over this briefly in the just to show the guys in on daily FX, but as long as you stay below this, you don't want to fight this. Now here's the broader median line structure, or that we're breaking right now. Take this back and snap these levels for you real quick. Oops. Here's the median line that we're breaking right now. And again, 786 comes in right here. A break below this region. You're basically looking for a drop into 50% retracement. This is from the advance off the lows that you made back in April. And that takes you into 33.55, 33.60, somewhere in that range. Quarter of the daily TR gives you about 30 pips on this one. So the range is there. I would just be on the lookout here to sell rallies, bearish invalidation with a move above essentially 135.50. As long as 135.50 holds, you look lower. I put a piece on this on Daily FX as well, guys. It's linked to that report on the update from the 27th. Any questions on Euro Yen? All right. Last but not least of the Euro crosses, as we head into the ECB, obviously we'll have a session tomorrow morning, guys, so we'll go over all the Euro crosses again to see where they moved to start off September trade. That's the beauty of our strategy, is that we really get to look at this every single day and kind of look into it on a more microscopic level to see, what price action is doing to open up the month. So these are my favorite times for analysis, to map out the levels, to kind of gauge what we're looking for. And as we get through these first couple of days of the month, then we really start to press these a little bit more aggression. So don't forget, you have ECB, you have NFPs, and then obviously the FOMC is going to be the biggest thing this month. So Euro Yen broadly looking lower, sub 135.50. Near term support, a break lower looks for 134.50. And we'll continue to eye the short side there, while below this broader median on the bearish invalidation level, like I said, gets dropped down to here at this point. Okay, so those are the three Euro crosses that have been sort of in my targets. Here's what the daily chart looks like, by the way, for Euro Yen. I love it. We finally were looking for a close and a break below last month's low. Listen, we haven't done it yet, but a break below 200-day moving average, tested as resistance, tested as resistance, tested as resistance, break the lows, keeps the focus lower. The only thing I want to see happen, and I really want to see this happen to get a little bit more validation for a lower drop into 133.50 possibly, And this is by way of which I'd like to play the euro short. If euro is heading lower, this would be the preferred play for me. Would be a break below 40 in momentum. Excuse me. That would be the first time we've seen that from above 60 since here. And do you see what happened? So from above 60, above 70, in fact, but generally speaking, from a bullish momentum signature, break below 40, and there's the downtrend on the upswing. Same thing here. 60, 60. This is the 60 break. We haven't seen 40 yet move. If this gives out, you'd look for a drop right into the median line. That'd be sort of the last ditch effort for this thing to give us a rebound before it starts to collapse. On the other side of things, it could be a great entry for the longs at that point. So we'll see from the scalp side of things. If we do close below this level, we'll continue to favor the short side. Remember 135.50, 135.50, excuse me, also at this point is going to be just below that 100-day moving average, but it's these median lines that we've been following that give us that conviction. All right, quarter daily TR still giving you about 32 pips per scalp, so a nice wide range. Dan saying, how do you stand on Euro Oz? Did we go over Euro Oz? Did we not? Well, let's do it. So for Euro Oz, Euro dollar, Euro yen, Euro Oz looks like this. Yeah. Actually, I think I might have given you an update on this last night. I'm not sure if I tweeted it or not, but this is the target that we actually highlighted right in the webinar. I didn't even look at this morning. So we did get the break above 58.30. Right on. So here's what it looks like from the start of the week. The start of the week thing just came into 60, held momentum. The 50 hold here, this upswing was a nice trade to the upswing. Remember, much wider ATR on this, right? 65 pips is a quarter of the ATR. So you're looking for 63, 66 pips per scalp. We're watching momentum while we're in these trades, right, guys? So certainly on the upside here, you see that you continue to hold 50 on the momentum. This was the break. It continues to suggest the upside is in play. The broader trade is still bearish, Dan, probably below that high day close. So for Euro Oz, that's the level I'd need to get through to get back on the constructive side. The immediate bias, of course, is still to the upside, right? The broader bias I'm talking about. On a stretch like that, you'd expect to see a simple correction, a little bit lower than that. Bottom line, we are at the median line. So on a pullback, an opportunity to get back long into the high day close, but this is what I need to get a little bit more on the continuation type mentality. Near term, the structure has been like super clean. There's been nothing here that's been out of surprise. Remember, on this one, we were playing the long side on that stretch into the high day close. We initiated shorts here, right, for the scalp on the downside. I remember this vividly because it's a much wider range trade. So I was chipping away on it on the pullback. We're back above that invalidation level. So look for the upper median line parallel. I don't like using retracements off the high, but if we use one just off that recent decline, just want to see if we have any overlap here. So sort of this would be the area of resistance you'd look for initially, right? And this would be the breakout for the invalidation. So I'd just be still looking for short entries actually as we get into these regions of near-term resistance. And this is a play, again, I would like to, or I'll default to for possible Aussie strength. The RBA didn't really give us much. You saw that the RB or the Aussie kind of lackluster, kind of lackluster. So you didn't really get the reversal play. You didn't break through the lows. You just tested the boundaries of what we're looking at. And again, nice confluence region here of that pitchfork off the highs from April and May with the lower median line, broader parallel that we're looking at. But at the same time, the lows, almost the exact swing low that we made in that radical Monday last week. So, and I don't really have much of a bias on this one, but in the event of an Aussie breakout type of deal, um, Euroaz would certainly be something I would be interested in. Dan, does that make sense? Mr. Norberg, just want to make sure we're on the same page for this. So look to buy pullbacks while above that median line, that basically the same key region we talked about last week, 58, 13 to 58.30, and while above this trigger. As we get higher towards this, we look for shorts either off 161.12 or with a break back below this region. And then we will be looking to sell rallies again. Just be careful in the stops. You have your much wider range here, so just take your time picking your entry. You'll get it. He says, yes, sir, exclamation point. Right on, Dan. Great to see you in the room, man. Fauzi says, can you advise on the S&P and the Dow? I don't really have setups intraday on those. Fauzi, I don't really trade those intraday. We can certainly take a look at them, 100%. Here's what the SPX looks like for me. So you've plowed through all the downside targets at this point. This is just the retracement from the advance off of the lows that you made in October of last year. For the wider range charts, you're going to want to check out Jamie's long-term page on SB. For me, I'm just kind of focused on what's happening in the immediate term. And at this point, forget all the fibs that you're looking at here. Just from a trend line analysis standpoint, obviously when you get these major surges, in price, guys, and you get these major rallies and major sell-offs, there's going to be shoot-throughs, overthrows, and false breaks all over the place. The major areas of which I liked the reversal was right there. That was huge, and the fact that the breakout originated from right here. Both those factors, for me, have us looking lower still. I'm not necessarily sure that we'll get a new low, but a much more prolongated consolidation range here, sort of like the one we came out of, but on a much wider range or a much wider, I guess the range is the only proper word to use there. So the immediate focus would be on the retracement off the lows. Again, I hate using these stretch emotional lows, but that highlights near-term support and the 50% retracement. The only reason I know this is because I did this yesterday, but and you can see the 50% retracement comes in at 14, and the 618 comes in at 1895, which is the same level we were looking at anyway. And a 2618 off the high gives you 1886. So those are the sort of near-term downside targets I would look at. This was a huge place we got into last week. Everyone was getting all like, oh, it's a V-stage recovery. It could be, I don't know. But this is what I needed to see break for that idea to materialize, and we didn't. So, I'll look for a little bit more conviction on this one, a new low or a new high to be set in so we can give ourselves some guidance here with some trend lines. But as it stands right now, that's my best shot for you on the near term or medium term there for the S&P, Fauzi. Hope that helps. Bernard, are you in here? Yes, Bernard, you are. So I know that you're always interested in the DAX, man. Same gig here. Same gig here. That median line right off the high is caught. Sometimes it's disgusting, guys, almost to the pip there. You see that? 3 days we tried to make it back above it and couldn't. And here's the turnover. So the focus again on this one goes right into this region on a broader scale. You just snap those trend lines. You can see again the lower median line parallel, which is where we bottomed out specifically on a close basis, still is focused at that 2618 was at 96.34 or something. So pretty wicked on some of these moves here. Yeah, I mean, any way you slice it, this is huge down there. Basically 9,800. Real critical. So hope that helps on the S&P and the DAX. I do want to take a moment to go over dollar yen. We've definitely got to take a look at that as we head into U.S. event risk later this week. But here's where we stand to open up the month. You know, we finally got that turnover that we were waiting for. Seemed like forever. And the recovery that we saw last week off of that major spike low stopped right at 112.83, which again is the December stretch high. Um, Also note, basic trendline support from the lows of the year turned resistance. It's a highlighted region there. It's where this thing exactly turned over. Look what momentum did. Really, really clean. Really, really clean. And while, you know, the first couple of days of this thing, ATR really hadn't spiked up enough to get us all excited, the setup and the levels were there. Super clean on the decline as far as the levels are concerned. Now that we have this spike low, I haven't really given this guidance with any Fibonacci per se, but remember, heading into the close of last week, we said 122 is going to be the bearish invalidation level. We couldn't even approach it to open up the week. We couldn't even approach it before seeing a downside break. These are just some basic trend lines and parallels, guys, not even a pitchfork, right? So here's the downside break. Let me snap these lines real quick. And my only problem here, again, is trying to work with too much Fibonacci, stressing that low that we made last week. But if we do take it just for reference at this point, you'll see that the levels actually are pretty decent. I think this is the high. Okay. So you can see that that 38.2 is being tested right now. You can see that 38.2 is being tested right now at 111.56. 118.90 is the 50, and that swing low that we made there on the 26th. More importantly, the level that we were watching anyway, 118.32, already highlighted here with the key 618 retracement. So the downside levels are pretty clear. By the way, 118.32 turns out to be the exact March low. So that's why it was highlighted already. We'll go ahead and clear out of that 100%. Clean this up a little bit. By the way, for those of you who are newer to the room, or if you're new to SB, first of all, welcome on board. But you can always take a picture of any of the charts that you see worked on here on the webinars by clicking on that camera in the right-hand corner of your GoToWebinar screen. Just a quick reminder, if you do see any charts that you'd like to reference later for your own use, you know, feel free to do that. But that's sort of my idea on dollar yen. Again, from here, you could see a snap to the upside. Wouldn't be surprised to open up the month. You know, there's going to be people who are going to want to clear out of dollar exposure ahead of non-farm payrolls, maybe even ahead of the ECB, although I think that's a less likely of a play. But there's your trigger to the upside. That you stay bearish below that. If you do jump through that, you look to reinitiate newer shorts, again, closer to 122. And that's going to continue to be our bearish invalidation level. A possible structure that was in play, and I was looking at this earlier, is something like this, which we just broke to the downside, tested as resistance. We'd need to see another break of that low, 111.55, 111.56. All right. Questions on dollar yen? Loony, does what the loony does. Now that we have that swing high in play, I suppose. Yeah. Still going to work with these operative pitchforks for now, but it's just an ugly setup. I haven't really been a big fan. I know a lot of you are in this, Mark. I don't want to insult your baby here, but watch that near-term support, 618 off the lows. It takes you into 131.04. It's going to be the major support that you need to break near-term at least to get this thing going to the downside. Again, targeting last month's low first, and then a break there, and you're suggesting a much larger scale correction, let's just say like that. But finally, we'll see if this thing's ready. Kyle wants to take a look at sterling dollar, and so we shall. Here's what British pound looks like on the daily chart. Now testing that 786 comes in at 153.30, but this thing is likely to bobble around this thing. See that median line off the high, Kyle? That's what I've been watching. I do want to point out that the momentum signature on the sterling has made a strong shift, and today's going to be a major disappointment, I guess, for the sterling bears or bulls if this breaks at the 40 handle here. So this is the first 40 handle break we've seen since from overbought conditions or above 60 since here. Okay, and that was a result of that break. So certainly from a momentum standpoint, you came from overbought. Yeah, you turned ahead of 40, but here's the 60 hold 40 break. It's real indicative of bearish markets. Wouldn't be surprised if we rally from here. At least this is pretty huge confluence. I really don't want to underestimate this really near term. I'm not just trying to dodge your question by saying wait for a rally to sell. No, this is actually a pretty big resistance zone or support zone near term. Hold on one second. Let me snap this again. So let me just show you what we're working with here. This is a broader range pitchfork from the 2013 high. Okay, support, resistance, break, support. Then you got the median line structure off the high. That's right there. Then you got the 786 off of the lows from June. That's right there. Okay. And now you're basically setting the opening range low for the week. Momentum looks like it's sneaking below 40. Downside support beyond this, or the key support region you'd look for is 52.20 to 52.46. This is going to be huge, specifically in time if it comes in later this week, really going to be critical, right? Because the median line will come into that region as well. Here's what the 30-minute looks like for sterling. So it's been a drifter, which is not typically my favorite trade. By drifter, I mean you don't get those trigger breaks like you did last week and the market runs. It's sort of just sit in it, right? Actually, last night did have you a nice trigger, or yesterday in US trade did give you a nice trigger to the downside. But again, here we are, real just chop fest. So you're coming into that major area of support. Not really interested in getting on the short side here. I am looking to sell rallies below 54.50, 54.40. And a break of the lows, you got targets down basically, like I said, 51.70, 52.20, 52.18, that 100 extension. Big region of support. So Kyle, does that help on the sterling, man? Let me know if you have any specific questions here. It's too early in the month, too early in the week to tell. It's not something which is again why I haven't really put it on the intraday pages. Last week, it was a great trade into major support. We were actually holding longs here that got stopped out on the pullback at break even when we moved right back below that key support threshold. It was dead cat bounce. You didn't even get a bounce through that. And that's the level you need to clear to get back on the constructive side. And as long as you stay below that, the propensity of this thing to fall apart is there. So I hope that offers some clarity on sterling. Dan says, I know from following you on Daily FX that sterling yen is your trade of the year. How do you stand on it currently? Thanks. Really awesome to be here. Dan, it's great to have you here, man. So sterling yen, it is the trade of the year. And a lot of that is based on the fact that the monetary policy divergence in this pair probably was of the strongest. And I just want to default 1 second to show you, um, Dan, the weekly chart. So here's a sterling yen chart that was published with that article that you were talking about or referencing from Daily FX. And, you know, there's some things that have changed since the beginning of the year. So the beginning of the year 2015, or heading into the end of, I guess we wrote those in December, we were looking, and we specifically looked for a pullback to get on the long side for sterling yen. And if you've played that, you've done all right. Now, the pair didn't quite make it through the upper bound of the median line. And if you take a sliding parallel of that same slope and extend it off the highs from last year, that's kind of exactly where we maxed out. And some divergence in momentum certainly is a foreshadow for a near-term pullback lower. Okay, what we're seeing in the pound crosses doesn't look all that bullish, right, Dan? So from this standpoint, you could actually see a pretty mean correction in this. Pretty mean correction, especially if there's a washout on this, implied yen short that everyone is just, it's just a given that the yen, the short is going to be the trade, right? Not always going to be the case, and I think that trade is getting so crowded, and we're seeing the softer tone from the BOJ. They're thinking that they might achieve that 2% inflation even this year, which is, in my personal opinion, outrageous. But nonetheless, if this thing breaks this support that we're coming into right now, it could be pretty nasty. This is a weekly chart, mind you, right? But momentum looks like it's dipping back below 50. You have the 52-week moving average here. You have the median line off the highs from last year and this year here. We've already made it through the yearly open. So we've already broken the yearly open to the downside. So we'll have to see what this weekly close looks like. We had a major extended advance, guys, of 11 or 10 straight days, 10 straight weeks of advances. Weeks, right? Trade like that's going to wash out pretty hard if it does. So watch near-term support right into where we are, the lows from last week, essentially. So with that in mind, Dan, if you go back to the daily chart, it shows that we're also coming into an interesting area of support. Let me snap some of these trend lines. This is a median line formation just off of the ascent from the lows that we made in 2009. Okay, you can see the upper median line parallel coming right into the 618 from the advance off the yearly lows, and that's just beyond where we are now, just a little bit lower. So yeah, sterling yen could possibly push a little lower. I wouldn't be surprised. The momentum signature since the start of the month, clearly bearish. Couldn't make one even attempted break through 60. Here's the 40 break and the break below the former resistance trigger that gave out last month. So broadly speaking, I'll be looking for a dip lower in sterling yen. I don't necessarily want to participate in the short side. If it rallies and gives me a decent rally back towards 85.30, it might be worth a stab. But I think, coming into this region, you could possibly see a little bit more of a pronounced rebound. Or if it breaks, Dan, this thing's likely just to fall apart completely. Remember, we've already made it through the yearly open. So after all is said and done, all the volatility, we're lower on the year, period. And from this, the intraday side of things, I haven't really been following it on the scalp side, so we could see if we have anything to put together here. Yeah, I'll take a look at this, Dan, for you tomorrow and see if we'll have something for you. The only thing I would say is near term, stay bearish. The immediate bias would still be bearish sub 85.30 with that key support. I mean, you're just sitting there. It's a little bit lower, maybe 82.88, 82.89. Much wider ATR, right, than the British pound. 56 is a quarter of the daily ATR, so keep that in mind as well. Dan, hope that helps. Let me know if you have any specific questions. He says, thanks. I know it's more of a swing sterling yen. I'm holding a short from 95 and 94 for disclosure. Well done. Well done. So if you're navigating from that kind of longer term setup, yeah, I would just be watching for a dip into that 83 region, okay? 82, like I said, 82, 88. Watch that 618. This retracement, by the way, encompasses the entire 2015 range. Those tend to be important retracements for me. Well done, Dan. Awesome entries, my man. Awesome entries. Okay, other pairs that we'll be just taking a look at. I wanted to highlight this yesterday, but I didn't get a chance, guys. There's a new setup I'm working on, so I've been sort of distracted here, and it's the beginning first days of the month, which is typically my quietest trading period. But we came right back into that same trendline resistance again. We've now played off this a fifth time from the highs that we made back in July. So did spike through it yesterday, closed well below it. And here's that resistance region yet again, prompting a nice turnaround as the momentum signature yet again faces that same resistance trigger. Here's what it looks like on the intraday. Aussie Kiwi was a snoozer heading into the end of last week. I had some really nice plays on this earlier in August trade. Last week, after this spike, I just didn't want to touch it because I didn't know what the heck to do with that thing. And then all week long, I mean, ATR on this just continued to contract and contract and contract until the open of this week. Failure to move above that line shifts to the downside back in focus. The only thing we're waiting for here to start engaging on the shorts or start operating on them, as it were, would be, a more concerted break below 40 or a hold below 60 on a rebound. If we just take a basic trendline support, you can see, I'm just going right off the cuff here, guys, that in fact, some really nice pivots on that slope break. Kind of getting messy over here, but you get the picture. So if we break below this and we finally make a break back, it would be looking like the same type of play that we've been doing over the last couple of months. And every run into that specific trend line has again offered us some pretty nice exposure on the downside. Once we get back below that 111 handle, if we do, you would want to work with this retracement. Again, I hate using that spike high. Yeah, those levels I'd be working with. Again, I'm not a big fan of using this retracement, so I don't want to stress that. I'd rather have clarity on some median lines than necessarily work with a retracement that's based off that level. So just for some disclosure there, doesn't necessarily mean that it won't play out. Just means just be cautious. And if we use any type of median line structure like that, it just continues to highlight the same region, which again is the 50 of the advanced, the basic trendline support, and now also of the decline. You got the median line there over the next couple of hours. So there's some on the fly for the Aussie Kiwi there for you guys, but watch the downside, watch for some near-term support, but we're looking to sell rallies generally speaking, well below that trendline resistance. Oh, Eileen, it's just stuff on the technical side. Nothing exciting. Christian says, "What's your stand on Aussie CAD? Looks like a major breakdown here. And by the way, thank you for a great service." Hey, Christian, I appreciate that. Aussie CAD. I haven't really checked on it, but yes, just looking at it here off the top of my head, yes, this would be full-on breakdown for me. Um, Big level of support. We've been watching it since the start of the year. In fact, after the March high, an extension off the yearly high highlighted the 100% extension, which was actually tested in June and held, but further highlighted, um, this 30 pip region, which has continued to be support all year long. And look at momentum. It's a 3-point trigger. It's finally given out. If we close today below 40, that'd be the first time we've made a close below 40 since here. Okay, and that saw another 3 days take you another 96 into 94, another 200 pips to the downside. And for the recovery, you'd look for a possible break of this resistance trigger. Even then, you'd look to sell rallies. You look to sell rallies well below 94.25. Not a pair I really scalp or have been involved in, to be quite frank with you, Christian, but let me take a look, see here real quick. Yeah, so wouldn't be surprised rather to see a little bit of a jump of support right here. A rebound back towards like 93.85, 94, and then you'd look again to take another move to the downside. You'd stay bearish below that median line essentially. See what this looks like on the near term. Well, it looks like I already had it drawn. Okay, so we've completed 100% extension. That held support into the close of last week. Here's the open of this week. It even offered a break of the opening range. Here's the downside move. Yeah, wow. Okay, so we've made a 618 extension off the low. And I think this is not accurate. If we need to bring to this low a little bit more precise. Yeah, the problem with trying to scalp these pairs, guys, is that now you're in ranges or territory that you haven't seen in years. So trying to find previous price action that would give you relative levels to trade off of becomes a little bit more difficult. I'll look into this and see if we can have something set up for you tomorrow on Aussie CAD here. The never-ending range, right? Dan says finally broke the never-ending range. Yeah, seemed never-ending. Hey guys, September, look forward to some much more volatility, a lot more to come. So we'll be back on tomorrow morning. We'll wrap things up here. Watch that euro and that dollar yen setup as we head into the open. Euro yen, euro Oz on the menu. I'll give you guys an update later tonight. And we'll be back on tomorrow at 8:30 to see if more of these setups are starting to open up. And again, September is just getting started, guys. Really looking forward to a lot more volatility, a lot more opportunity as we get deeper into the month. Best of luck trading, and I will see you guys all tomorrow. Cheers.